Hey everyone, so it's Jonathan. This is our free video and today is Fed Day, so what a great day to talk about bonds. Now I have a ton of experience trading bonds, traded bonds for 8 years, proprietary firm downtown in Chicago. I'm also opinionated about bonds because I've seen how proprietary shops trade fixed income, trade interest rate futures. So I got a pretty strong opinion. So in front of you is going to be just ZB. Now ZB is going to be, ZBM is June 7, 2017. The first thing a lot of people don't understand when they're trading ZB, it's a 30-year future contract. But if you look under the hood, what it really is, it's about 18 years. It's not really a 30-year. It's bonds that started off as a 30-year, but now the futures contract is a basket of bonds with an average duration of 18 years. Okay? That's the first thing. And for me, I hate guessing or speculating whether bonds are going to go up or going to go down. Now, I think that rates are going to go higher and inevitably futures are going to go lower. But when that happens, that's the million-dollar question, right? So rather than guess or speculate on direction, what I'm always going to do, and every prop firm that I know, this is how they trade bonds, I'm going to trade one against the other. I'm going to trade the 10-year against the 30-year. That's the ZN against the ZB. Or I'm going to trade the ZB against the Ultra. Here, I'll put the chart up so you can see. So in front of you guys, this is just going to be the ZB against the UB. And I'm using Sierra charts here. And the reason I'd rather do this is instead of guessing which way the 30-year is going to go or guess which way the 10-year or the 5-year is going to go, I want to trade the difference between the 30-year and the UB, okay? Think of it like a rubber band. How they pull against, but to me, they're inevitably coming back, right? So it's not like the ZB can be up a ton and the UB is down. That's really not going to happen because what it is, it's just the difference between 18 years and about 30 years. So you're trading the spread between those two on the yield curve. And you can trade 5s against 10s, 10s against 30s, ZB, UB. And so what I like to do, stay patiently around the edges. When it gets expensive and you can sell a ZB and buy a UB. And you put on that spread, hoping for it to kind of mean revert. When it gets down here or down here, you can buy the ZB and sell the UB. Okay? This is exactly how I trade fixed income. And that brings me to Infinity Futures. That brings me to Patrick, Patrick's helped a ton of my members over at Infinity Futures because Infinity specializes in futures. At least that I found, they're the only ones that do margin correctly. And here's what I mean. If I put this position on, I sell ZB and buy UB. If I do that one time, Infinity is going to charge me about $2,000 for margin. But Thinkorswim or another brokerage, they're going to count those two positions independently. So they're going to look at me as being short ZB, long UB. The margin is $5,000 for the ZB, $5,000 for the UB. So on Thinkorswim for 1x1, I'm going to have like $10,000 worth of margin. But Infinity Futures, someone who handles margins correctly, recognizes the correlation between those two products. And so Infinity, it only cost $2,000, just estimating to hold this position. That's a really, really big difference. So that's exactly why my advanced bond students, I'm always suggesting, guys, if you're going to trade relative value, if you're going to trade relationships, go talk to Patrick over at Infinity. It makes a ton of sense. So for the first time ever, guys, I'm going to present with Infinity Futures. Really excited to show you exactly how I trade bonds, but then show you exactly why we need to be doing this trade with Infinity Futures because, again, they're doing margin correctly. It's an absolute no-brainer if you're doing futures trading, but especially if you're doing any kind of what we call relative value trading. And you can do this with fixed income, but I also do this S&P against the NASDAQ, S&P against the Dow, WTI, CL against Brent. wheat against wheat, corn against soybeans, you name it. Everything needs to be looked at relative to something else. So, excited to tell you about it. May 10th. Jonathan, I'm doing a presentation with Infinity Futures. If you're watching on YouTube, I'll leave a link below to sign up. Come and join me. Come and learn about this really special trade, okay? Any questions, guys? Email me, Jonathan at Active Day Trader. Thanks a lot.